I see a lot of familiar faces in the crowd, but for those of you that don't know me, I'm Frank O'Brien. I head up the forensic internal audit division, and I handle the vast majority of fraud cases that come through our office. So today we're just going to talk about some of the fraud schemes that we've seen over the last year or so, and also talk about really what a dealer or the general manager or the CFO or controller can do to guard against these instances of fraud, so to help protect the assets of the dealership. And the one thing I do want to just pause and state is that a lot of the steps, a lot of the controls, so to speak, they're not overly sophisticated. A lot of them are very basic steps that you can take to help prevent or detect these types of fraud schemes in a timely manner. But what happens is, over the course of time, people get very busy, and what may have been implemented back here in the past sometimes, falls by the wayside or is not being effectively implemented going forward. So basically, the fraud schemes that we've seen can be kind of categorized into three groups over the last year and a half. First is cash. I would say probably about half of the frauds that we investigate involve cash. The predominant thinking of the car dealer is that everybody pays by check, everybody pays by credit card, everybody pays by debit card. We don't get that much cash anymore. And the funny thing is that percentage-wise, you don't get a ton of cash, but you still have enough cash that someone can steal. And if you think about it this way, if the average dealer has $50 million in revenues, 1% of that's $500,000. So I mean, there's probably about 1 to 2% of cash that's coming in, and we still see a fair amount of that cash theft. So we'll look at that. Second of all, the general manager. This is predominantly issues with absentee owners or multi-franchise points. What's happening in the industry is the mom and pop dealership is going away. So you don't have the dealer in the store every day keeping an eye on things. So we need some procedures to kind of guard against the devious general manager. We saw a couple instances of that. And then it wouldn't be a fraud seminar if we didn't talk about parts. There's always a parts fraud, so we have an example of that as well. So cash. Cash is obviously very liquid. The big issue in car dealerships is that there's an inherent segregation of, or lack of segregation of duties in the accounting office. The average accounting office has between 2 and 4 people, and because of that, you can't properly segregate the duties. So typically, you have the same person that handles the cash also post it to the general ledger, write up the deposit slip. And because of that, you have a risk there. So cash receipts is always an exposure to the dealership. And we'll talk about what can be done about that. And also disbursements. I mean, the amount of checks that go out of a dealership are tremendously voluminous, and we always seem to see a couple instances of fraudulent checks or some type of fictitious vendor scheme that hits. So recently we investigated a check substitution scheme. Basically what a check substitution scheme is that you have your daily, you collect your daily deposit. You have all your cash that comes in and all your checks that come in. You have a report summarizing both, right? What the office person does is takes cash out of that deposit and then takes a receivable check that comes in through the mail typically and inserts it into the deposit so that it ties out in total, but the cash and the checks don't tie out individually. What this person was doing was she was actually taking the daily deposit and changing the payment type in the system from check to credit card. So instead of the deposit having that check, the credit card clearing account, it went over to the credit card clearing account, and then she was either taking cash out and replacing it with that check, or, and this I still can't believe to this day, she was actually taking some of the company checks and depositing them into her own bank account. So this person was she was handling the cash, writing up the deposit slip, posting it to the general ledger, and then she also was taking it to the bank. She was using the same bank as the dealership, and the bank completely missed it. There was no collusion or anything with the bank. We looked into that. The bank was just completely negligent. She'd just go in and she'd put the dealer check into her bank account and then the other deposit into their bank account. And she stole approximately $275,000 over 3 years. So one of my, you know, I don't want to call it a pet peeve, but one of my recommendations for dealers is in order to segregate the duties around here, you have to segregate the custody of the asset, the physical handling of the asset, with the ability to post to accounting. Because that's when you cross those lines, that's when you get into trouble. And the best way to do that is to take that deposit and have your cashier write up the deposit slip, put it into a Ziploc, you know, a locked bag, put it in the safe, and then go to the bank the next day. And then the cash sales clerk can then take the deposit slip, all the backup support, the cash sales report and whatnot, and post to the general ledger. That's the best way to do it. If you can't implement that system in place, someone has to reconcile the daily deposit. And what I mean by that, it's not just taking the deposit slip and making sure that it agrees to what's being posted on the GM. It's taking the deposit slip, what's been posted, and then all the backup support, ideally the itemized list of cash and checks that you collect for the day, and then tying the whole thing out. It probably takes only about, you know, your controller can probably do that in about 5 to 10 minutes if they do it on a daily basis. If you try to go back, you know, a month or 2 months or 3 months at a time, it's a lot more time consuming. Then we looked at a fictitious vendor scheme. So this was a controller of a multi-franchise group, and what he was doing was disguising payoffs. He was cutting checks to a fictitious entity that he had control of, and he was disguising them as vehicle accounts. And then he was posting them to accrual accounts. And what the interesting thing was here was he actually, there was a real bank account. It was a real entity that he controlled. He was actually the treasurer of this entity, and he kind of transitioned the name of this fake credit union that he was supposedly making these payoffs to mirror the entity that he had control of. And basically, he was writing these checks. He's posting them to the accrual accounts. I know dealers love their accrual accounts and whatnot, but he was able to use this to hide it because nobody was reconciling these accrual accounts. The interesting thing was he didn't have check writing ability. But what he did have was he had admin rights in the DMS, which is not uncommon in this business. And what he did was he went into the admin rights. He created duplicate logon ID numbers based on the people that did have check writing ability. And then he created you know, fake logons that he was able to cut these checks and then perpetrate the scheme. And he stole over $700,000 in a 5-year period. And the interesting thing was that the dealership ended up writing off $1.9 million, of which they paid bonuses on of at least $200,000, which ultimately resulted in an additional write-off. So in this scenario here, number one, admin rights. You can't give your controller admin rights to the DMS. I know that's sometimes tricky, especially in smaller dealerships. But if you can restrict that, that's definitely doable. If you have an IT person, the IT person is the ideal person there. But the other thing too, and I know Kevin mentioned it, is reviewing the canceled checks. You know, reviewing the canceled checks and then asking questions or having them pull the support every so often is one of those steps that it can be painful. It's a little bit tedious, but it goes a long way. And I would say probably about 10, 15 years ago, I think Joe Greenspan convinced everybody in the industry to review the canceled checks. And then over the course of time, what happened was the bank stopped giving you the canceled checks. So now you got to go online, and you got to pull them up one by one, and that just takes forever. So what I'm telling dealers is, you know what, talk to your bank, have them get you PDF, at least PDF copies of that page that shows, you know, 8 checks to a page or whatnot, and then you can look into it, and you can follow through and and just follow up on any checks that may look unusual or you're not sure of what it is. And as Kevin said, what you end up finding in a lot of these instances is that you see, oh, wait a minute, we didn't realize that we were still paying this vendor. We canceled that contract. Or this vendor was only supposed to be X number of dollars a month. And you find these other little bits of information that certainly go a long way in managing your business. So dealer groups now, absentee owners, there's an exposure there for general managers that have full autonomy of the store. We'll look at a couple of these examples. The first one, really, this individual was running all sorts of personal expenses through. In fact, I know you probably can't read this because I was in the back and I couldn't read it, but it says, name the best 3 line items in the income statement to hide your Florida condo expense. And the funny thing is that, and it's not funny, but ironically, I mean, you ask any controller in here, you could probably bury $500,000 without really batting an eye. You have, the average dealer has about $10 million in assets, about $500,000, $600,000 monthly expenses. It's not that difficult to hide personal expenses, and if nobody's looking at this stuff, it could be a huge exposure to the dealership. And then we'll also look at an interesting situation where there's a trade equity theft scenario as well. So this first situation, there's an absentee owner. Actually, the general manager had a small percent interest in the dealership, and because of that, the controller basically did whatever he wanted. And the reason that this got caught, what was interesting about it, was that the dealer was actually engaged in a buy-sell with another dealer to sell the franchise, and when the general manager heard about it, he said, okay, that's great. I think his percentage was like 10%. He's like, but I want 25% of the blue sky. And he's like, go pile of sand. And they basically had a huge blowout, fired the guy, hired a former dealer who was retired to come in and just said, hey, I just need you to oversee the store until I close on the sale. And then all of a sudden he started getting these bills in from these unusual transactions. I mean, this guy, he didn't just run one set of country club dues. He had 2 country clubs that he was memberships to. He had an old-time hockey team that the dealership paid for the rink time. He also sent the team up to Quebec every year. Every meal that the guy ate, the dealership paid for. He spent $1,000 of booze every major holiday. I mean, this guy, he just ran everything through. And what he did was on the expenses, right? So he had a company credit card. But then what he'd do is he'd take the company credit card, he'd charge a lot of his meals to the company credit card, and then run it through as an expense report. So, I mean, at least it was creative, but I mean, over a 7-year period, it's still $1.6 million. So, I mean, there's certainly, it goes to, kind of show that, again, looking at the canceled checks, even if the dealer doesn't do it, if he has a CPA take a look at it, it still goes a long way in just keeping an eye on things. The other thing too is that I know expense reports aren't a huge deal in the car business, but typically expense report is the #1 area for fraud in a business. So if somebody's going to steal, usually they start out on their expense reports, and sometimes you can kind of nip that in the bud before it ever happens. Then early in the year, we looked at this multi-franchise group. They had a general manager, and what he was doing was personally purchasing vehicles at a lower value, basically when the dealership stole the trade, no pun intended. And then he would buy it for the lower value and then trade it back in a couple months later for market value. And what he was doing was creating false or fraudulent equity until the point where he either got a check cut back to him for the trade equity, or he sold the car on the street. And he did this on 30 vehicles, but it wasn't just that. What we found when we did the investigation was that he also had several of his, it wasn't just him, it was family members, it was also his cohort, so to speak, his friends. Certain of his friends were doing this as well. And it cost the dealership approximately $800,000 over 7 years. So one of the things that from a standpoint here, it's like all employee deals should be signed off by the dealer or upper management, and there's also some trend reports you can run through your sales history of customer transactions to see if there's frequent customers, to see if there's any of this type of activity happening. And then finally, the parts is, so we've seen a shift in the industry over the last several years where the cashiers and the parts and service departments are going away, and they're being replaced by the service advisors and the parts people. And I highly recommend against this because what it does is it opens up to exposure. Because first of all, the service advisor or the parts individual can change that invoice before they close it. So it's very easy for a service advisor to pre-invoice a repair order, give it to the customer. The customer then, pays for the transaction. They run a discount through it, and then they can pocket, some cash. But what was happening here was a little bit different. The counter person was actually running core credits to customers, right? And then he was charging his own card for credit. So he was crediting it back to his credit card. And in accounting, never matched it up, the original transaction, to the credit memo, even though he sent it up to the accounting. So he would send up, the original transaction for JD's Auto Body, and then the credit memo was him, right? And they just never matched it up. So he ended up, stealing $22,000. And what actually happened was the credit card company was the one that kind of brought this to the dealer's attention. So those are kind of some of the schemes that we've seen. I mean, most of them aren't very sophisticated. The schemes in the car business tend to be pretty straightforward. So a lot of times the mechanisms to prevent or detect this can be just as straightforward. Number one, just review the balance sheet. And I know that sounds simplistic, but a lot of times the balance sheet, other than the controller, isn't always reviewed. And when we go back, when I talked about the controller with that $1.9 million, write-off. Well, how did he hide $1.9 million? That's a huge number. Well, what he did two things. One, he put it to prepaid expenses, right? So nobody was looking at the actual balance sheet to see that prepaid expenses was $1.9 million. But then on the financial statement, which management looked at, he changed the PCL code so that it went to floor plan no payable. So his floor plan was actually lower than his inventory. So, and I know you guys know that anytime you look at a balance sheet, your floor plan is always going to be a little bit higher than your inventory because of the cars that have been paid off and also the holdback. So just looking at the balance sheet or having someone look at within the upper management look at the balance sheet is a huge step. We talked about the reconciliation of the daily deposits. If you can't segregate duties, that's instrumental. I can't stress enough reviewing the canceled checks. Vitally important to review the canceled checks, and then that way you can see what the actual money is going towards. There's also a thing called positive pay. For those of you that don't know, basically what you do is you issue to the bank before they clear the checks the list of checks that you're gonna issue, and then they, if there's any deviations, they'll send you an exceptions report so that you have to approve it manually. We talked about the prepaid and the accrual accounts. Those have to be reconciled. It's also good to have someone outside the organization, whether it be a CPA firm or whatnot, take an independent review of the balance sheet. It's typically done at year end, but it's also good to do, mid-year and whatnot. I'll give you a perfect example. I was just at a dealership last week, and the situation is where, they were supposed to go out in the summer. They kept pushing us off, and then finally the dealer said, you know what, just come out here. They said, we're not ready, and then the dealer just said, finally, come out. And you come out, and their receivables are a mess. Their inventory's upside down, and the problem is that they didn't want you to come out here. They weren't ready because they knew they had issues, but it's good for the dealer to see that, because then you can deal with them. If we're out there in the summer, there would have been a lot more timely, the information. Now they're chasing after, those receivables and whatnot. General manager expense reports should be reviewed by the owner or management. Same thing with all employee deals. The admin access, like I said, should be restricted. Controller, office manager, general manager shouldn't have that because those are the ones that can do the most damage. But it certainly should be restricted to just your IT people. But I understand there might be some logistical items. Deleted employees. Delete the logon for terminated employees. We talked about the cashier a little bit. Match all customer refunds to the original purchase. It's done in the accounting office. It's a simple step. It takes no more than a few minutes. We talked about the segregation of duties. It's also a good idea to test the internal controls. You know, test the internal controls, whether it's done internally or externally. You know, if you pull deal jackets, you pull repair orders. You know, a lot of times, I mean, we're just looking at a bunch of repair orders for a dealer recently, and he didn't realize what happened was the advisors are supposed to participate in the discounts, but because now they've changed the way they handle discounts, now go to advertising, which a lot of the manufacturers want to see. You know, now all of a sudden they're not participating in the discount, and the dealer had no idea. So the dealer was floored. He said, "This is a huge problem." I said, "Yeah, I know, but it's because they just went ahead and changed the accounting of it, and it changed the whole pay plan." So we've also seen in shop supplies, another example, where the advisors will take off shop supplies as a way to discount and then not contribute to that. And then finally, I always highly recommend background checks, reference checks. There's been several examples where we've investigated a fraud. Actually, I've personally investigated a fraud and then walked into a dealership 6 months later, and that person's like standing in front of me. And you just look and you tell the dealer and you say, "Hey, that's what, this is what happened, and you need to be aware." Actually, we recently, we investigated a fraud probably about 10 years ago, and the woman then went to work for another dealer. We told the dealer said, "Never on my watch. This will never happen." The dealer recently sold. The new dealer comes in and caught her stealing in like the first month. And I'm sure she didn't start with the change in dealership. She's probably been stealing for the last 10 years. So unfortunately, sometimes it's just good. I know good help is hard to find, but it's also important to have people with integrity and also finally have the controls to mitigate against the potential that they lack that integrity. Questions? So that's just a brief overview. I just wanted to kind of bring you up to speed as to what we've seen, what's been going on. Any questions? Like Kevin said, my email's up there as well, so you can certainly contact me and shoot off any questions you have.
One thing that, just to add to what Frank said, one thing that I try to have a lot of my clients do is like an office manager controller checklist. And on a monthly basis, it basically is a 3-page checklist that basically hits every balance sheet account and tells you what's on your books and records without having to look. And it goes down cash, receivables, NSF checks, rebates, how many rebates over 90 days, how many, it's a checklist. And the reason why I like it is because if you do it, they should know this stuff anyways, and it shows if you have a controller, you'll know if a clerk's not doing their job if they're looking at it. But what it really does, in my opinion, is it allows your books to be clean from a balance sheet perspective, because they're going to hide it through the P&L, but they are going to hide it on the balance sheet too and make it go away at times. Like one of the ones you brought up was in accrued expenses. That's easy to catch if you're looking at the accrued expenses. So from that perspective, I mean, this controller's checklist works, in my opinion. And the only other one that I think that you didn't bring up that I think you need to do is, when it comes to payroll, have someone review the payroll after it's done. I can't tell you how many times that you see it and the payroll gets approved and then the person processes payroll. Well, that's great, but no one looks at it afterwards. And they gave themselves another check, or they gave themselves a bump, or they gave it that. So that happens more often than you think. So you want to look at the payroll after it's been processed, not just before. You can approve it and all that, but make sure it's done after. So you want to make sure you get that control in place. And then Frank did say, when it comes to this stuff, most of these controls, most of this theft, you guys probably already saw it. And you implemented controls back then. It's implemented, it's making sure the controls are in place. Refund on credit cards, I've seen that theft probably 3 times at least. And the control is very simple, either, match up the card and make sure the person doing the refunds is, a cashier and not the person doing the books and records. So a lot of these things are basic and can get caught very quickly if the controls are in place and being followed. You have the controls, but it's being followed is the big thing.